Hey friends, so I want to share a story from today. We're here in Maui and we were at the pool this morning and this punk kid took a handful of rocks out of this kind of pool that has a beach at it and threw it right in my son's face. Thankfully, my son was wearing goggles, so he was okay. But this is a perfect example of what so many dividend stock investors are facing right now with these online bullies. Once a bully, always a bully. These kids who are bullies, they just grow up to be the same when they are older. And it's important because there's a lot of dividend stock investors right now that are even questioning the strategy overall. Is it the right strategy or not? This is personal finance. Only you know what is right for you. There are so many bullies out there. If I had listened to these naysayers throughout my life, I wouldn't be here in Maui, Hawaii right now with my family enjoying a really wonderful vacation. If I had listened to these naysayers, I would have never moved to Idaho where we have an amazing life. If I had listened to these naysayers, I probably would not even be married right now. And so what I want to share with all of you today is if you are seeing comments on social media, on the internet about dividend stock investing and you're questioning what you're doing overall, only you know the right answer, what's best for you and your personal finances. It doesn't matter what anyone else is saying. Let me take another kind of track of thought here to illustrate the point. Have you ever been to a party before where they're serving a lot of unhealthy foods? And just imagine if you went to that party and you brought your own food with you, something really healthy. They would criticize you at that party. Oh, you're trying to be healthy? Why are you bringing that? But if you just ate the cake at the party and all the junk foods, they would say nothing. Sometimes it's human nature when someone is trying to improve themselves. They're trying to better their situation. They're trying to do something above and beyond. Others in society, they're going to step up and they're going to say something. Hey, why are you doing that? I'll give you another example. If you're at your job and you put in a little bit more effort, you stay hours a little bit longer, you try to really do the right thing because maybe you're going after a promotion. Maybe you want to earn more money in that job. Some of your colleagues, they may start taking notice. They're going to say something. They're going to be like, hey, why are you doing that? But if you did a bad job at work and you just tried to be lazy and do status quo, they probably would not say anything at all. And so I just want to warn everyone out there, whether it's dividend stock investing or whether it's even another strategy like growth investing, tech stocks, total returns, it doesn't really matter. Find the strategy that works for you, stick with it, and tune out the noise because the naysayers, the haters, they will always be there. They will always be there. They will always be criticizing, and only you know what is best for your personal financial situation. Now, I have a funny story here about dividend stocks. So I was on a date the other night with my wife. We went to Leilani's restaurant, which is a popular restaurant in Whalers Village, and I ordered, the man came to the table, the waiter, and he said, what drink would you like? And I was really interested in having a Sprite. I'm long Coca-Cola, K-O. I love my Sprite. I enjoy it while I'm traveling especially. And I ordered a Sprite and he said Starry. And I'm like, no, I'd like to order a Sprite as a beverage. And he's like, Starry. And I'm like, what is this man saying? Is he confused? And so I tell him again, no, a Sprite. And finally he said, no, there's a beverage, Starry. That's what we have. And it's so funny because I ended up ordering this Starry and I had another Starry I guess later in the trip. This is a product of PepsiCo, which is another company that I own. It's actually my #1 top dividend stock position. It's a great company. It's performed very well. But the Starry was all right. It wasn't as good as a Sprite, but hey, PepsiCo has been a great performer in my portfolio, and I'm always happy when I'm on vacation or not, and I get to contribute to the profits of the very companies that I own in my personal portfolio. So put in the comments below. I'd be curious if any of you had tried out a Starry before, what you think about it as a product from PepsiCo. And so in the rest of the video today, I want to take an opportunity to talk about dividend stock investing versus total returns investing. And the reason for that is a lot of the critique coming to dividend stocks, it seems to be from people, these naysayers who believe total returns are better. And they try to speak for everyone out there that they know what's best for my personal situation, even though they know nothing about my life. I think both strategies are actually valid strategies. They're both good strategies. I want to compare and contrast both of them. And at the end of the day, there's no one that's going to understand you or me like ourselves. And so I'll tell you from investing, I think there's really a few pillars that matter. I think one pillar is just overall returns. Anyone who is investing money is looking for better profits or rewards for the money they're investing. I think another pillar of all of this is just what kind of strategy could you even stick with? There's some investors that are more motivated by one strategy or the other. I think time in market is supreme. It matters how long you can stick to a strategy. And so I think that's an important pillar of investing as well. The third pillar is risk tolerance. Not all of us have the same risk tolerance. Some of us can really stomach the volatility, the ups and downs in the market, and other people cannot do so as well. And so those are really the three lenses that I like to look at any investing strategy. And each of us has different preferences on these three pillars, and it helps us arrive at the right investing strategy for our personal situations. But I just want to compare and contrast dividends and total returns a little bit, because maybe you're at home and you're trying to understand, well, which strategy could make more sense for your own situation. Obviously, I've chosen dividends for my personal situation. I've been at dividend stock investing over the decades now, because I'll tell you, for me, the most important two pillars are having a strategy I can stick to. I'm very motivated seeing the cash flow from dividends. I don't like a lot of volatility in the market, and so that's really important to me. And I'm optimizing cash flow component of my returns. And I want to have returns that are strong overall, but even more than that, I'm willing to sacrifice some total returns if I have to have a high amount of cash flow, because I need cash flow now to pay for vacations like this, which are not cheap. Anyway, let's talk about dividend stocks. So as you can see on the screen in front of you right now, a few things that are really great about dividend stocks is they allow investors really to pay their bills right now. There's a steady stream of cash flow growing typically in a linear fashion in the best quality dividend stocks that comes in over time. Dividend stocks are also really great because they tend to be low volatility. They don't have as much volatility as the overall stock market. It's motivational with dividend stocks because you receive dividends quarterly, sometimes even monthly, and it's motivational to see the money roll in. That's something that keeps me hooked on the strategy. I've been able to stick with this strategy over the decades because I see the cash flow coming in. Generally, cash dividends from high quality companies, it will grow in a linear fashion over time. It's motivating for me when stocks go down. This is an important point. With investing overall, investors tend to get scared when markets correct. Sometimes when markets correct, you'll see these naysayers come out of the woodwork. They'll start saying, I told you so. They'll start bullying people online who are investors, and they'll try to get you to sell your shares. One of the things I love about dividend stock investing is when share prices go down, I know my yields go up, and I can get more for my money that I deploy. And so for me, it's really important to have a strategy that actually celebrates stocks correcting. It actually is more enticing for me when stocks correct. But let's keep going. As you can see on the screen in front of you right now, the next thing I want to share is it is just easy to stick to dividends in bad times, because not only are starting yields going up, but also I have a linear fashion, a linear amount of income coming in. Sometimes it's even growing in these bad times, but it is get rich slowly, and it can be boring. Obviously, it's a strategy that requires a lot of dedication and many decades to really see it come to fruition. Now, by contrast, total returns investors, there's some pros and cons with that. And when I talk about total returns, honestly, dividend stocks offer total returns as well. But I'm really talking more about like an S&P 500 style index strategy. I'm talking about a strategy that really optimizes more for growth I'm talking about a strategy. It might not offer as much dividend cash flow. It might offer some, but it's really weighted more on just growing the portfolio. Check it out on the screen in front of you right now. And so with total returns, it can drive superior results over the long term. If you're just looking at raw value creation from the act of investing, it can be superior. And so this is a good strategy for the right people. It can be great for those that don't need cash flow. They don't want cash flow. Some investors who are really in high tax brackets and already have maybe cash flow coming in through a business, for example, they don't need more cash flow. They'd prefer just to defer those cash distributions from a tax perspective. Total returns can be really great for them. Stocks that don't offer dividends can be great for them. It can be good for younger investors who have a lot of time ahead and don't really want cash flow or need it. They don't mind volatility. I will say that total returns investing, it can be more volatile because the indices that offer total returns, like the S&P 500, I'll get to this in a minute, they're very heavily weighted on tech stocks, which can be volatile. They can have high PE ratios. These businesses are in flux. They're growing very quickly, but the street's perception of their value changes quickly, day to day, week to week. There's a lot of concentration on tech stocks. And so I want to just say again in this video, it does not matter if you're watching the video today and dividend stock investing, it's not right for you. Maybe you are a total returns investor, or maybe you're some other type of investor that I'm not even discussing today. Maybe you're a startup investor, real estate investor. You can be a bond investor. There's all different types of investing out there. I'm talking about two of the really popular ones today that are discussed a lot on YouTube and online. But the key thing is you should figure out what is the strategy for you, block out the naysayers, and stay focused on that strategy over long periods of time. To kind of compare and contrast dividend investing versus total returns investing, I also thought I would compare the SCHD index to the equivalent S&P 500 index from Charles Schwab, just to give you a flavor of how they compare and contrast, how they're different, how they've evolved over time. And so as you can see on the screen in front of you right now, the first thing I want to do is I want to show SCHD. This is an index that I own, an ETF that I own. It mirrors the Dow 100 dividend index, and this is a really great ETF. I have a hard time with my active management these days even beating this ETF. In the olden days, it was a bit easier. These days, it's much more difficult actively to manage stocks and even beat this particular index. But what's interesting and worth noting is with SCHD over the last 10 years, on average, it has given 10.91% per year results, total returns results. And it does that with a high component of yield. And so the yield on this particular ETF is 3.47% as of right now. Actually, it's a bit lower if you look at the last, I just pulled that off Yahoo Finance. It's a bit lower if you look at the last 4 quarters. I think what Yahoo does is it takes the last quarter, multiplies it by 4. But anyway, you're getting a yield in the mid 3% range. Now, by contrast, let's look at Charles Schwab's S&P 500 index. As you can see on the screen in front of you, the ticker on this one is SWPPX. I used this. It's not the most popular S&P 500 fund, but I used it because it's also Schwab. Let's compare apples to apples. And the first index is kind of a rough proxy of your dividend growth strategy. This one is a proxy, I'd say, of a total return strategy. And as you can see, the 10-year results on average are 12.63% per year. So it has done better than SCHD. It has done that, though, with more volatility, but on average each year it's doing 1.72% better. It's not insignificant. I would say a big part of this delta has happened in the last year or so, and I do believe in mean reversion. So I do think SCHD and SWPPX over longer periods of time will probably be closer to each other than they are now, but there's no denying it. As of right now, the total returns, it's done a little bit better there. But what I would say is it's also with probably more risk and doesn't offer the ongoing cash flow. It's offering a yield right now of about 1.8%. 8.35%. And so they're both valid strategies, but I need an amount of cash flow coming in to pay my bills right now. And I don't want to rely on selling shares to do that, because shares go up, shares go down. I don't want to sell shares when they're down, because when you sell a share, you're not just selling the cash portion of their balance sheet. You're selling it all, everything that share represents, which includes the future stream of income, the operating business. But a dividend, when it comes in, it's coming just from the balance sheet, from their cash reserves. It doesn't require an investor to sell off basically the goose that laid the golden egg, the actual business behind that cash flow generation. And so for me, the dividends make a lot more sense. But I want to keep going. As you can see on the screen in front of you right now, I want to just compare and contrast SCHD versus this SWPPX in terms of the top 10 holdings. And so with the top 10 holdings in SCHD, you can see they comprise about 41% of the fund. And you can see that there are a lot of well-known dividend stocks like Texas Instruments, Amgen, Lockheed Martin, Chevron, Pfizer, PepsiCo, Coca-Cola, which I just discussed, so on and so forth. And you can see with SWPPX, by contrast, the top 10 holdings are a lot more volatile. They are tech stocks that tend to command higher PE ratios. And you can even see Eli Lilly on there, which is a very high-flying stock now because of their weight loss drug. And I would just in general say that the holdings represented by SWPPX, the top 10 thankfully is only 32% of the fund, so it's not as concentrated, but you have quite a bit of volatile holdings in there. I'm not really saying one is better than the other. For me, I can say SCHD and the dividend strategy is the way to go, but you need to figure out which one is right for you. And it may be neither of these strategies. It may be a completely different strategy. But to really summarize the video today, because it was born out of this moment in time right now where I think a lot of people are at odds on the internet. They're trying to prove this is right, you're wrong, I'm right, you're wrong, all these kind of controversy and haters. What you need to do, in my opinion, is, as you can see on the screen, is stick with it. Figure out a strategy that works for you, stick with it, stay true to yourself, tune out those naysayers, because they are going to be there in investing. They're going to be there in every single part of your life. Honestly, if you don't have the naysayers, the haters, you might not be doing things right. So don't worry about that. We all have them. I've experienced them myself online, but they don't sway me from dividend investing. I've been at this for multiple decades, and I wouldn't be here in Hawaii right now if it weren't for my dividend stock investing. It works for me. It may not work for someone else, but it works for me. Be careful, though, who you share your strategy with, because there will be people out there, especially when you're a beginner, that try to just convince you not to do it. It's human nature. It's kind of like if you bring the health foods to the party and people start critiquing, why are you eating that? You should be eating the junk food like me. No, you know what's right for you. You know where you want to go in life. Find the strategy, stick with it, but avoid sharing it with the wrong people. But also find the community online where you can find support, like the PPCE and dividend stock community. That's a great community, of course, and you'll find a lot of great people in the comments below. And we have a lot of great discussion there as well. And so I hope you enjoyed the video today, everyone. Just a fun video here from Maui, Hawaii. Thank you, mahalo, for watching the video today. I'll see you in the comments below. If you did enjoy the video, please don't forget to click the like button. It really means the world to me. I'm taking out some time here from our family vacation to share this video, and so the extra love and support means a lot. Before I go today, in terms of a full disclosure, I do own the stocks mentioned today. I own SCHD, which is an ETF in my portfolio. I'm long PepsiCo, ticker PEP. I'm long the makers of Starry. I'm long Coca-Cola, ticker KO. Also, I'm long Chevron, ticker CVX. I'm long Pfizer, PFE, and that's it. Before I go today, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my personal journey. It's possible to lose money in the stock market. Also, I'm not offering any kind of tax advice either. All right, everyone, I love you all. Thanks for watching the video, and I'll see you in the next dividend stock investing video.